In this video, I want to talk about the 3 things that you must do when the market is down. You need this. This is the intangibles. These are things that will protect your capital, and not just that, it will take your portfolio to the next level. So if you want to know more on what it is, check this video out. Hey guys, so in this video, I want to talk about what are you supposed to do when the market is dropping. And I do know that there's a lot of people watching this channel with a variety of experiences and a variety of length of time in the market. So I do hope that regardless of your experience, this is something that will help you, because at the end of the day, newbie or someone who's a bit tenured, we all need information when the market is going down. And the whole goal of this is somehow to give you a breath of fresh air that, please remember this, it will always go back to how your foundation is. Because if your foundation is good, that's what's going to protect you also when times get shaky. Please remember, the reason why you're in the stock market is because of the volatility. And part of the volatility is its movement going down as well. Meaning, for you to make money, also, you have to understand that markets dropping is always part of the game. So, tip number 1 when markets are down, tip number 1 when markets are dropping is basically to pause, not do anything. If you're in front of your trading screen right now, pause, don't do anything for 30 minutes, wait, and let the logic sink in first. Because a lot of people, when the markets are down, the common tendency is they want to react quickly, and that's where emotions are very, very high. The emotions of fear, the emotions of, if I do not sell it now, my stocks may drop even more, or the future may not be as bright, that if it drops, I could see my stock fall even more. And the fear that, and let me flip it, the fear also that you made 40%, now you're just seeing your gains 25%. The fear that it may be even reduced from 25 to something that's even lower as well. So that's what I want to submit to all of you guys. I want to submit that when you see your stocks down, you see your portfolio down, you see it either from it earning money to something that's of a lesser degree of earnings, or from it earning money, then it suddenly turned red. Pause first. You do not have to react quickly. The biggest mistake of a lot of stock traders and investors is they react by emotion. And rightly so, the stock market is all about emotion. It's all about if you see your money moving on a direction that you don't want it to be, since it's your money, it's something that's hard earned, it will cause you to react based on your emotions. That's why I've been harping it over and over and over and over and over. The only money that you put in the stock market should be money that, even if it goes to zero, you're supposed to be okay. No one wants your money to go to zero. However, it has to be an amount of money that you're not willing to touch it for a very, very long period of time. So, pause. Don't do anything. Relax first. Then when your emotions are out the window, when you get to think logically, that's when you start to make your transaction. I'm not saying you're not going to get a loss, but what I'm saying though is better make a decision based on something that you know is very, very sound, something that's very, very logical, and not just triggered by the fear to either lose more money, or the fear that you're nanghinayang ka sa gains that you should have had if you sold at a higher price. And it happens. So I hope that this is something that helped you. Number 2, as you start pausing, the next thing that you should do is actually this. Revisit. You have to know, am I in this? Is this portfolio for investing? Is this portfolio for position trading? Is this portfolio for quick trading? Why? Because if the portfolio, the position is for investing, the next thing you need to look at is this. Is the stock going down? Is there a particular news item? Is there a particular disclosure that fundamentally affects the company? When I say it fundamentally affects the company, it fundamentally affects its ability to give dividends if you are in it for dividends. It fundamentally affects the company's ability to grow if you are a growth investor. Or it fundamentally removes the ability of the company to give you something that's stable, something that's predictable. If any of those things would change, then by all means, you have to sell. Please remember, you are an investor because you like the business. You are an investor because you believe the company is doing well. You are an investor because you believe that when you come in, you invest right now, later on, because the company is so good, it will give you a profit, whether it gives you recurring dividends or whether the capital appreciation would be amazing. But if any of that gets threatened, then take profits if you're at a gain, sell if at a loss. You can sell at a loss if you think that all of those things, all of the things that you like about the company on why you bought it at the first place are all threatened. So second thing about that though is this. As you start to revisit and then you see, looking at the news, it's just all sentiment. Looking at the news, this is not something that affects the company over the long term. Looking at the news, this is something that's just really price action. This is just really people just having a negative opinion about it, but it doesn't change. So what does it do? If you see none of those things, the growth is not threatened, the dividends is not threatened, how amazing the company is not threatened, but you just see the price falling, then this is the arbitrage. This is a way for you to make money. This is a way for you when everyone's scared, you can now start to buy. Please remember, there's a big difference of buying a company that the fundamentals is amazing and it's just being sold down versus something that really there's a real threat, a legitimate threat for the company to not be as good. So that being said, news item, disclosure, it looks negative to a lot of people, but based on your analysis, nothing's changing in the company. You buy as much as you can. And this is where what Warren Buffett would always say, when everyone's fearful, you're the one that has to be buying. When everyone's so scared, when there's blood in the streets, you're the one who should be picking it up. But you're not picking it up blindly. You're picking it up when your emotion is gone, when you're just using pure logic, you're just using pure fundamentals, or for you to be able to analyze your decision. So tip number 2 is you have to revisit. That's you revisiting it as an investor. However, there will be some of you who are position traders. Position traders, basically, if you don't know what position trading is, you can check all of my other videos about technical analysis here in this channel. But basically, position trading is you following the trend. It's what a lot of people call trend following. So what does this mean? Please remember, when trends happen, there are still downward moves toward the trend. When trends happen also, there will still be retracements. There will still be movements down on a particular fashion of the trend. So why am I saying this? If the stock is still in an uptrend, even though there's a correction, if the stock is still in an uptrend, even though there's a downward cycle, then I guess there's nothing for you to be fearful. As long as the uptrend is still in effect, you can still hold on to your positions. Again, people have this misconception that when I buy a stock that's in an uptrend, it will forever go up. Please remember, uptrends are waves. What do I mean by waves? Since there are waves, there will be upticks where it's moving up like this, but there will be ticks also where it will have to retrace downward. Your goal is not to be scared of this, but your goal is to follow this. As long as it's still moving like this, then there's nothing for you to be scared of. You can just follow your plan, you can just stick to your plan, and you can just push and follow the uptrend. As long as the uptrend is in effect, regardless if there's bad news, you are a position trader, hold your positions. Now, what if the uptrend is not there anymore? What if it started to reverse? What should you do? By all means, regardless if it's good news or bad news, whatever you see, if the uptrend is not there, your main goal, your main narrative, sell. Sell right away. You don't have to wait for it to even drop lower. As long as the stock is no longer in an uptrend or the market you're positioning to is no longer in the uptrend, you have to sell. You have to take profits. Or even if you're getting it at a loss, you have to sell. Please remember, investing, position trading, quick trading, anytime you're into the markets, there will always be an opportunity where you may have to cut loss if things are not going your way. So that's the game of the market. If you cannot take the volatility, you cannot take cutting losses, my biggest suggestion for you is to go into something that will give you a fixed income, something that will give you, if you put ₱1,000,000, after a stretched period of time, you know your capital will never be lower than ₱1,000,000. So something like that. But if you're into the markets, if the trade is not going your way, if the trend is no longer up, sell. If you made money, take profits. If you bought at a high price, you may need to cut losses as well. Comment right now if you're learning. Comment right now if this is something that's helping you. The reason why I'm doing this is really, I don't want you guys to react based on emotion. The reason why I'm doing this is I want you guys to win. I want you guys to be able to analyze the markets based on what it really is. Because I've been seeing this over and over and over and over again. Been investing for over a decade. What people don't know is this. These are just cycles. This is cycles. What goes up will also go down, and what's down, people will find that it's so cheap to ignore. People will find that it's so undervalued that they will pick it up, then it will start to go back up again. It's all about either how you select or how you time or how you just spend a lot of time in the market, because that's how money's made. That's how you can segment it. That's how you can be different from everyone else. You don't have to follow what the herd is doing. That's why when people ask me, who do I follow? I don't follow a lot of people. I've learned from experience that the best way for you to be profitable in the market is to learn principles like what I'm giving you, learn strategies like what I'm giving you, but decide on your own. You don't have to follow what everyone else is telling you. That's why one of my biggest influences, three influences: Ray Dalio, Peter Lynch, Warren Buffett. You can search them up, but they're amazing people, amazing principles, but I do not follow what they buy. I just follow the principle and the logic on why they're buying it as well. Are you guys learning? I have more tips pa, but before those tips, just a very, very quick plug for those who want to learn the principles that I've been talking about here. I have seminars, I have sessions in different parts of the world: February, Taiwan; March, Manila; April, London; May, Doha, Qatar and Singapore; June, Auckland, New Zealand; July, Sydney, Australia; November, Dubai and Tokyo. So all of them are in the links below. If you want to learn from a classroom setting, you want to learn face-to-face, and if you guys want to meet me also, that would be fun. If you guys want to meet me, those are the sessions. They're all in the description below, or you can type the city that you guys want to attend, and I'll have the team send those links for you as well. For those who want to consume via online, sa mga gustong matuto kung anong stock market in Tagalog, I have an online course with Chinkitan. The link is also down below. Just look for Chink TV. It's all there. Then, for those who want to learn about the basics of business, the basics of investing, I have an online course also with Shansi, with the heart of teaching you how to invest in a business, how to start investing. Online course. If you're an OFW, I highly suggest that. If I'm not going to your countries, these are things that you can get. And lastly, and I say this all the time, I invite people to do this. For those who want to read, I have a Shopee account. All of the links are down below on how you can order via Shopee, and it will be delivered to wherever you are not in the world, but in the Philippines. So let's continue. We're still at tip number 2, guys. Comment below if you're learning. Comment if this is something that's helping you as well. Tip number 2 is you have to revisit. But I said revisit your plan as an investor. Revisit your plan as a position trader. Lastly, revisit your plan as a quick trader. Remember, position traders follow the trend, while quick traders trade the volatility. Meaning, by all intents and purposes, if the stock that you're owning, because of the sell down, is breaking down from the support, you need to sell. If it's breaking down, you need to sell, because you do not know how low it will go. You do not know also how further down it could go as well when stocks break down. And you can combine this. Now, I made several videos about candlesticks. If you see a large red candle breaking that support, get out of that position first and come back and live to fight another day, because it will go back again to another support level. So please remember, if you're a quick trader, your liquidity is your strength. Why? Because if you cut loss there, you can transfer your money to another stock, or just wait until it hits another support level and then you start buying there. So just a couple of things. When a stock starts to break down, cut loss, or when the stock hits the support, no matter how bad the news is, but it starts to bounce. So a couple of things that you can look at. Look at if the candle's turning green at the support and then RSI is oversold already. Buy if it bounces. Or indecision candle, dodgy candle, large green candlestick at the support, RSI is oversold, buy, quick trade for the resistance. For those who attended our Stock Smarts sessions, please revisit our lessons on RSI on how to pull that off as well. So that's my tip for those revisiting their plans as a quick trader. You don't always have to sell if you are a quick trader. As long as it bounces from the support, you're supposed to be okay. Tip number 1, you have to pause and don't do anything. I highly suggest 30 minutes. Number 2, revisit what your plan is. Tip number 3, and I guess I'll end it with this, so that this is just a 3-tip video. Cash is king. People, you don't have to be always positioned in the market. The whole context of having cash is it's a position. It will allow you, it will protect you when things are not going so well. The cash that's there will protect your portfolio from falling, especially as compared to if everything is in the market. And here's the thing, you can use that cash later. Bala yun eh. You can use that cash when things are not doing so well and everyone's scared, you have something that you can use to buy stocks. And that is your bala. That is something that you can use to buy stocks when it's low. So do not be scared that I'm not positioned in the market. No, 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 no. Cash is king. Cash is a position. Cash will protect you. Cash will give you options. Cash will give you opportunities for you to be able to make money when everyone else is actually scared as well. So what you do is this: when everyone's panicking, ready your cash. Why? Because when you are an investor, you see valuations become cheaper already and not much has changed in the company. Use that cash, buy, put as much as you can right there when those signals start to come in. The same way if you're a position trader, when it reverses from something that was in a downtrend into something that's reversing up, use that cash to be able to buy and position for you. The same thing if you're a quick trader, the stock that you wanted bounces from the support, use that cash, deploy as much capital as you have in all of that. So there. And I'm gonna make more videos like this, especially as long as we haven't seen the market recovered yet. Comment below if you want me to make more videos on what to do when markets are dropping. These are just 3 tips, but probably I can make a series off of this if you guys are so interested and you guys want to learn more. I'll try to do this. I haven't done this exercise yet. If this video hits 350 likes, thumbs up, I will make another video about this, a second video talking about your battle plan while the market is down as well. So let's see, 350 likes. I don't know. I'm trying to experiment also on my YouTube if this will actually work. We're at the 15-16 minute mark. I don't know if you guys are staying. Also, comment below if you guys are staying as well. And I want to know what's the best thing that you've learned about this. And if this is something that's helping you, super, super appreciate it. If you're just new to this channel, please subscribe and smash that bell so you get updated every time I create videos about investing, about the stock market, about business, so you get updated. And for those who've been here, who've been recurring, super appreciate it. Please like, please comment. It helps in the algorithm. It helps this message of investing be propagated to more and more and more and more Filipinos as well. So I guess that's it for now. I have to end with an inspirational quote. Pressure again. I guess what I suggest is this. And markets, they always move in cycles. But here's the thing. It's not worth it that if you lose sleep, if you lose your peace of mind, if you are not so comfortable about what's positioned in the market, then the most important thing is still your happiness. The most important thing is still your peace. I love people investing in the market, but please do not put an amount of money that you cannot tolerate. You only have to put an amount of money that when it's in the market, it should be an amount of money that even if it goes to zero, you're okay with it. Pursue happiness first. Pursue what makes you happy. Don't pursue money. Don't just put in money in the stock market because you want to earn more. Put in money because you know the money that you have in the stock market is what you can afford to lose, what you can afford to go to zero. But if it does well, it will help you reach your financial goals even more as well. And that's all I want. The reason why there's this daily videos is I just really want to see more and more Filipinos win. I just want to see more good guys win. I just want to see you guys, those hustling hard, those working hard, to have more opportunities, because I really believe the Filipino, we deserve better. We deserve better. We deserve more than what people think we deserve. We deserve highly better things because we are one of the hardest working people in the planet, especially if you're an OFW. I've seen it eh. I know the struggles that you've been going through. I know that it's not easy. I know that to be away from your family, to be the Westerners' perception of us, how we perceive Filipinos, I want that to change. And if we become the richest people in this region, things will change. When people start coming here because they know the jobs are here, things will change. And it's because of us. We're gonna do it. I really believe that this will be one of the greatest investing generations ever. You have to believe it, because what you believe is something you will pursue. What you believe it's something that you will walk in. What you believe it's something that you will start to do over and over and over, no matter how hard it is, no matter if people don't believe in you. It doesn't matter. Why? Because you're running your call, you're running your race, you're running something that no matter how tough it gets, because you know that's what you're called to do, you're gonna do it and you're gonna pursue it. And that's why I keep doing videos like this. It's easier to trade stocks and make videos, the effort alone, just to be able to make these videos daily, the content, whatever I want to share. But I know this is something that will change the next generation, that will change this generation, that will elevate all of us into something that's bigger, better, and greater as well. So this is Marvin Gerbo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.